With jobs numbers coming in way less than expected on Friday, and with unemployment continuing to rise, it's clear that the US economy is now teetering on the edge. President Trump has called on the Fed to lower rates for months now, and instead of staying ahead of the curve, it looks like the Fed is essentially waiting until the last minute to cut rates, with bond traders now pricing in 100% likelihood that the Fed will cut rates this month at the September FOMC meeting. What's interesting is that the market is now pricing in a jumbo rate cut this month, a 50% basis point cut instead of the usual 25. This happened last September, which lit a rocket under the market and led to the huge rally through December. Even if a jumbo rate cut doesn't eventuate, the rate cutting cycle will begin anew this month, and it's about time. Treasury Secretary Scott Bessent wrote an article that was published in the Wall Street Journal on Friday that criticized how the Fed is doing its job. When asked about this critique, Chicago Fed President Austin Goolsbee didn't even bother responding. Watch this.
Just a few hours ago, Treasury Secretary Scott Bessent came out with quite a broadside against the Fed in the Wall Street Journal, laying out a lengthy bill of particulars against the central bank. Your research is bad. Your forecasts are bad. You've contributed greatly to income inequality. You've destroyed the housing market, blurred the lines between fiscal and monetary policy, and created a culture in Washington where policymakers rely on the Fed to bail them out after they make poor fiscal choices. Are these criticisms fair or unfair?
Look, that's for the American people or the pundits or somebody to decide.
With inflation continuing to stabilize, I don't know what the Fed is waiting for. Jerome Powell has said that tariffs may cause inflation to spike, but so far we haven't seen strong evidence of that. I mean, look at this chart of the inflation rate over the past 3 years. It looks pretty stable to me. So unless the CPI report this week provides a negative surprise to the upside, I think the new rate cutting cycle will begin the week after. So what does this mean for us investors? Well, I think the stock market will continue to go up, but the real winners will be the sectors that will benefit the most from lower rates. These are housing-related sectors such as home builders and retailers, financials that sell mortgages, as well as small caps and growth stocks that rely on cheaper capital. In this video, I'll give you my top picks in each sector from a momentum perspective. The first industry likely to benefit from lower rates is housing, specifically home builders, since they will get more work as housing supply increases, with people building more homes because financing is cheaper. My pick in this sector is PulteGroup, ticker symbol PHM. There are a couple of big home builders around a similar size, and there are two reasons why I picked Pulte. It's the best performer out of the 4 home builders I looked at over the past 12 months, and it also has the highest ROE, or return on equity, at over 20%. Pulte is America's 3rd largest home builder, and the key to its profitability is its disciplined investment in land. This diagram shows how the investment process begins in the land underwriting stage, where they carefully evaluate potential sites for development to ensure high returns and minimize risks. To be quite honest though, this is a highly competitive industry, and it seems like no single company has a strong edge. As you can see in these charts, the top gainer in each time frame appears to change frequently, meaning you're probably well off with any of the large home builders from a momentum standpoint. When it comes to the chart, we see that Pulte is a strong long-term performer with a stock up more than 3 times since COVID. Currently, it looks like a cup is forming on the weekly chart, which is usually a bullish pattern. If the rate cutting cycle starts as planned this month, I don't see why the stock can't hit new all-time highs by year end. That's just my opinion and should not be construed as financial advice. The second stock I want to mention is not exactly a home builder or even a housing stock per se, but an online retailer for home goods called Wayfair. It acts like Amazon in that it connects tens of thousands of suppliers to millions of customers. Companies like these are likely to benefit from a recovery in the housing market because as home values increase and more new homes get built, people need to buy things to furnish them. Wayfair is by no means a super growth stock. It's more of a value play, and I don't do these very often because it's hard to make money out of them in momentum investing. And the reason why I picked this stock is because it appears to be making a recovery after getting pummeled way back in 2022. It also dipped earlier in this year due to Trump's tariffs, but it doesn't seem like they're hurting the business as much as the market expected. In fact, Compared to 12 months ago, Wayfair generated more revenue, more profit, and actually made positive income in the latest quarter. If we look at this chart, Wayfair just finished on a 3-year high. And even if the stock doesn't get back to its all-time highs, there's a legit chance that it could at least reach the halfway mark of the previous big decline, which gives us a target of around $180, and that's plenty of potential upside. Again, this isn't financial advice, it's just my opinion. By the way, Wayfair is in my monthly top 30 momentum stocks list. If you want to see what other stocks are on this list, click on the first link in the description below to get access. Moving on to financials, and the first company in this list is Rocket Companies, ticker symbol RKT. This is America's #1 mortgage lender, and it seeks to provide an end-to-end platform for all your housing finance needs, from acquiring the home to accessing equity for renovations and even for getting other loans. In fact, after acquiring Redfin a few months ago, users can now add home search to the experience. There's also an AI angle to the stock, as the company has recently begun to invest heavily in AI to improve workflows and cut costs. You can see a few examples in this diagram. When it comes to the chart, Rocket has had a checkered life on the big boards, with the stock struggling to make any headway since it IPO'd in 2020. However, recently the stock appears to be recovering, with volume increasing significantly over the past 6 months. Rocket Companies is likely to recover as the housing market recovers, and I view Rocket as not only just a short-term momentum play, but also as a long-term value play. Again, this is not financial advice. Another industry set to benefit is small caps, those companies with a market cap of less than $10 billion. And the one stock I want to mention in this sector is Lemonade, ticker symbol LMND. Lemonade is an insurance company that insures houses, cars, pets, and also provides life insurance. Lemonade is using AI to increase operating leverage, and as you can see in this chart, the in-force premium, or the amount of premium it charges every year, has risen without a commensurate rise in operating costs. This indicates that Lemonade's business model is scalable, which Wall Street loves. And if we look at the chart, Lemonade appears to have bottomed out after several years of basing. Companies like Lemonade are likely to benefit from lower rates because it means they can raise capital at a cheaper cost. And insurance companies like Lemonade need capital in order to acquire more customers. If Lemonade keeps doing what it's doing, I can definitely see the value of the company increasing and the price of its stock along with it. Alright, that's it for today, short and sweet. If you own any of the stocks in this video, let me know in the comments below. We'll have a talk about them. And if you want to support the channel, or if you want access to the top 30 momentum stocks list every month, then click the link in the description below. Thanks for watching. Please hit the like and subscribe button, and I'll see you guys next time.